Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Tuesday, October 18th, and we saw another green day on the markets today. The last round of mega bank earnings came in, Goldman Sachs, Wells Fargo, and they continued to do well, which helped push stocks higher. But also after the close, Netflix reported earnings, and they added something like 2.5 or maybe a little bit more than that million subscribers on the quarter, which kind of reversed this trend that they were seeing where they were losing subscribers, and that pushed the stock higher. So far, there's been no indication of hurting in the earnings. It's been all good so far, and that's really why the stocks have bulled higher. But I will say to be cautious while you see stocks moving aggressively upwards. In this environment, the Fed is still raising interest rates. Inflation has not started to come down yet. So I think you need to be cautious whenever you see stocks fly like this. Usually in a bear market, you see stocks up over 1%, 2%, 3% back-to-back days, or for many consecutive days. It's usually not actually a good sign. It's usually more of a sign of a bear market rally. And so now is a time to be cautious when you see stocks flying like this. And they might continue to rally even through the end of the year, but that doesn't mean that we'll see a change in trend overall. And I don't think we will until the Fed ceases to raise interest rates. So the S&P 500 was up 1.14% today. The Dow Jones was up 1.12%, and the NASDAQ was up 0.9%. And again, it was really boosted by the earnings that have continued to come in. And even though the big banks have done well, we had Goldman Sachs CEO David Solomon, and he was warning on CNBC today that there was a good chance the U.S. economy may enter a recession next year. So despite their good earnings, he himself was still cautioning against what is to come still in the economy. So let's take a look at the S&P 500 chart today. We opened higher at the open. We opened around 37.49, 37.50, kind of up in here. We went as high as 37.62, and we closed around 37.19. 37.1998 is the exact number, and we're sitting right on the top of this zone that we have mapped out. Now, we do have some candles, a little bit of structure above right here, but this is really the zone that I'm looking at on the market, and we're kind of sitting on top of that right now. So this is acting as a little bit of a cushion. It's acting as support right now, and that could push us higher. Obviously, the next level I'm looking at, if stocks continue to rally through this earnings season, is the 38.93 to the 39.80. So this zone could be somewhere that we go to next. And then even if we break through there, then I'd be looking at this trend line, honestly. And let's bring in the 200-day moving average. We haven't looked at this in at least a couple of days. Let's bring it back in. So the 200-day moving average has now it's crossed over this trend line that we have. So I'm going to keep this on the charts now every day, because this 200-day moving average will act as resistance when we touch it. And it will be significant when we break through it. Even if we haven't broken through this trend line yet, that'll be pretty significant. So, we're going to take a look at that, and we're going to keep an eye on that. But that's what I'm looking at on the S&P 500 right now. Obviously, we've been in this pretty sharp decline since the summer rally, since August. And we've headed down pretty sharply, with the exception of like this 4 days right here. And so it could be time for a bear market rally. But let's take a look at Bitcoin, because Bitcoin's acting pretty strangely. So again, it's been very correlated with the stock market. We've been in this range for over 4 months now. We've broken through the trend line, but we haven't shown any strength. we actually saw underperformance compared to the market today, and we saw that yesterday too, despite it being green. We're sitting on the top of this range right here, of this zone, at just over 19,000. And my theory about why we're not seeing any strength despite going through this trend line is because basically it's waiting for the market to come down. I think the Bitcoin market understands that this is just a bear market rally in the stock market, and it doesn't have sellers here despite this trend line, but it doesn't have buyers either. And I think when the market does turn over again, that we will see some form of a dump here. And I think it's dangerous now that this trend line, so if you look at this vertical line right here on this candle, by the time we get to this October 25th, the trend line will be at the bottom of this range. So let's say we break down, the stock market sells off and we get into here, there's not going to be a lot of wiggle room, and it could push us down below this 17.7, 17.5 level that could push us towards the 9,000 to 12,000 that we've talked about. And if you're new to the podcast or the channel, the reason we have this 9,000 to 12,000 target on Bitcoin is because the last time that we broke through that zone was in an uptrend, and we actually haven't come back down to it, and there's not really any support. So this is like where we're at right now, right here. And once we break through, there's nothing significant until you get back down to like 12,000. So if you take a look at that horizontal line, about 12,000 here. So that would be take a look at that horizontal line. That would be like the first level. And then right in here, like the 9,000. So take a look at that horizontal line, and you can see that on the left side of the screen. So like right here, 12,000 to 9,000 right in there. So that's what I'm looking at. And there's no other real structure until you get to there. So if we break through this level, and you can also see why I had this trend line on the chart. If we break through that level, that's really the target. And the weakness that I've seen in Bitcoin here really makes me think that we'll see that eventually. So I think it's waiting for the next leg down as far as this market goes. But again, it's hard to call a bottom in the crypto market, but it would be irregular to see 4 months of trading at this price and have it be the bottom on the Bitcoin market. You typically don't see that. So that's what I'm looking at there. Again, on the S&P 500, we're sitting on the top of this support level. And we could see a little bit of a bear market rally through the earnings if they continue to do well. But again, it'll only take one big company to disappoint to push this market lower. I think that with the big tech earnings next week, that could be telling to where the market could go. If we see them disappoint, could push it lower, and if we see them exceed expectations, it could accelerate this rally. So that's all I have today. If you enjoy this type of content, I do encourage you to subscribe on YouTube and follow wherever you listen to podcasts. I release one of these videos every single day that the market is open, and on the weekends I release a more in-depth video that just it's more involved with what's going on in the markets right now. You get a little more analysis, stuff like that. It's usually between like 30 and 45 minutes, whereas these are a little bit short. If you haven't listened to last weekend's episode, be sure to do that. I talk about how to invest through a recession and how that applies to right now. But until next time, I appreciate you watching or listening to this episode, and I will see you in the next one.